Happy Quadruple Witching Friday. All right, good morning, everybody. You ready to go? Quadruple Witching Friday. If it's going to expire, it will expire. If it does expire, it will expire. Another component to the market today. So let's get on with it. I can't wait. 3, 2, 1, go. So let me remind you that trading is risky. It's not appropriate for everyone, but cheer up. Your past performance, if it was bad, or even if it was good, is not indicative of future results. So always please stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Good morning, how are you? This is a Friday, another great trading Friday. It's a unique one. So options or contracts will expire today. So that might create a little bit different volatility than normal a normal everyday trading day. So keep your eyes open, keep your eyes on the prize, be focused. All right. Also, I would say ask questions, get involved. I will try to share my experience over the last 20 years of trading currencies. So let me know how I can help. We can cover currency pairs like euro dollar, pound dollar, euro yen, pound yen. We can do commodities, gold, oil, silver, Bitcoin if you want. We can do some exotics. That's fine, right? So just let me know how it can help. The overriding objective of today is to not just kind of set up trade plans for Friday, like you should have done that yesterday. So really we're kind of looking at today and next week, the rest of the month, the rest of the year, that kind of stuff. Too low? Is the sound too low? It was an adjustment in regards to the humming noise. Maybe I just got to have my mic a little closer. Oh, okay. So anyway, so thank you for being part of this community and your positive energy and the hard work that you put into this thing called Forex. Trust me, it will pay off someday. It's well worth the investment of your time, your efforts, and your money. Also, as you're developing skills, you need to practice in the market. It doesn't predict future results, but you're trying to create positive trading habits, right? So in the beginning, what you should do is have a trading account that's a demo account. Even if you have a live account, you should also have a demo account, because then you can test over here and then try over there. So visit tradersway.com and open up a demo account there. You can start with that. That could be a place where you get used to trading on MT4 or MT5, or maybe you prefer C-Trader. But you need to understand your trading platform, as well as the tools that are on these platforms, as well as your own trading habits. So start with the demo. visit tradersway.com, open that up. If they happen to earn your loyalty and respect as you're going through your educational process and developing your skills, and then you feel confident enough to have a real account, it'll be an easy decision for you to open a live account at Traders Way because they've already earned your loyalty and respect. Cool. How do you get the currency scan as me? You can visit metatraders.com. By the way, if you need resources, you're thinking, Wayne, how could I have the same chart templates as you? The link is in the description below the video. Wayne, I'd like to have a broker like you. Okay, great. The link is in the description below. Wayne, I'd like to have some training. Well, there's video training courses. The link is in the description below. Once you've completed the video training, you're welcome to sign up for my live group. The link that you have to do that at fxbootcamp.com. If you're like, Wayne, I prefer like to read. I like to sit on the beach and read a book. Great. I wrote a book like 100 years ago because people asked me to do it. The link to that is in the description below. So there's a lot of resources that have been created over the years, and all those links are in the description below. Okay. Also, would you please click the thumbs up button, the little like? Please tell YouTube this is quality content. That's all I'm asking for. Okay. Okay. One question: the CFDs WTI expire on? No, futures contracts. Okay, futures contracts and options. Boy, I'm trying to drink my fabulous coffee around this microphone. So most likely you don't have a futures account. Most likely you don't have an options account. But other market participants do, and they will be forced to make decisions. So the day I was hanging out with the professional floor trader who specialized in the 10-year T-note, he only traded just before and just after rollover, which is, in this case, this is what we're talking about. So some rollovers are different than others. Some are quarterly, some are monthly. But on quadruple witching, everything that rolls over today. So if you were in a March futures contract and you want to be in an April futures contract, you'll have to roll over today and get off one contract into the other. Now, what we do on our trading platforms, they don't expire because they're derivatives of those derivatives of the futures market, of the commodities market. Okay, it's not like if you screw up today, someone's going to deliver crude oil to your driveway. Okay. All right. So let us be going now. Dollar has come back. This is the counter move we talked about Tuesday, I think, where maybe even Wednesday, the market's going to freak out one way, and then it's going to freak out the other way, and then we go back to doing what we're doing. Notice we finally got some yen strength. I don't know if we're reading into it, and we probably are, something called confirmation bias. But we're expecting some yen strength here. We expected it earlier in the month, but it's what, the 19th? Okay, it's not the 9th, but it's the 19th. So it'd be interesting if this is to stay or to stick around, this yen strength that I'm looking at here. What if the yen strength stayed for weeks, not just hours? Okay. Wouldn't that be interesting? So we'll have to keep an eye on that prize. Swissy neutral. CAD lost its strength and now is neutral. Euro was weak but now is gaining some strength. Kiwi, Kiwi has been still the underperformer for a very long time, and it's still sort of underperforming. In Asia Pacific, you see like Aussie's down and Kiwi's down. Well, the Americans and the Chinese had a little conversation yesterday, and it led to nothing. So that's not good for Asia Pacific, for example. So, Aussie and Kiwi down a bit, just a bit. And pound is pound, up and down. Yeah. So, really, I look at this, looks kind of quiet, don't you think? Okay. Okie dokie. So sorry for being late today. I got up probably an hour and a half earlier than I really needed to. Uh, I did some. I caught up on my email and read some news. Then meditated and took a shower, and that whole process takes an hour. Then I cooked breakfast for my children before they went to school. And then I sat down and I was doing some stuff at my desk for, I don't know, 45 minutes or so. And then I look at my clock and I'm like, holy crap, it's 8:15. So no, I didn't just roll out of bed. But anyways, apologize for being late. I was so early, I ended up being late. So let's take a look. Let's do some yen pairs. HK Kiwi is not been, it's been quite dovish for many months, and it has to do with the economy. That's why it's underperforming. So as a risk on currency, it's probably the least risk on. Okay. So this is has great potential for a head and shoulders, which was risk off. Okay. And remember, we have this hypotheses, and I'll mark this as a top, and you can see it's been influential. We have this as the month of March, okay, which we're in here. That's what we're actually measuring. Okay, in this zone here, we expect that there's some potential yen strength. Now you can see the yen strength showed up right at the beginning of March, and boom, the last day of February came in like a lion. Okay, March kind of started like a lion, and then it kind of grew this kind of strength back. But is this yen strength here going to continue? I don't know. Okay. But I'm always worried about it because it tends to happen this time of year. Okay. And that's that. Oh, you can't see the prices? I can adjust that. Ultimately, you should have your own charts. So, but let's see if I can adjust that for you. How's that, E? Uche's like, much better. Cool. All right, so again, a failed extension doesn't mean bullishness, does it? Okay. And we're not making higher highs, we're making higher lows. Huh? So we'll have to pay attention. Not only is this a big flag to say stop buying, but we also expect yen strength anyways. So now, is it technically showing up now? Okay. Does this say buy? No, it says this big rally that's been happening since October might be taking profit time. And it's right on cue, right? Right in the middle of March. Makes sense. Okay. So, again, do you think this is important information? Technically, it seems to be relevant, right? Yeah, Daniel, when you sign up, it says, here's an email, don't delete it. It's important information. If you ever need to change your membership settings, you just click this link. Okay. And kitty cat. One big bearish day, huh? Still more bullish than the other pairs, but that bullishness obviously can end. That chart looks the same as Aussie yen, Kiwi yen? No. Yeah? I thought it was different, but let's look at it on a daily. Yeah, suppose so. Suppose so. Yeah, on that time frame for sure. So that really what it comes down to, right, Richard? Is whether a mediocre week shakes you out of your long-term plan. So going back to this CAD, especially with the updated, zero lag moving average, you're like, yeah, it's still bullish and probably will remain bullish. Okay. Fareed says, we want strong yen for a better price. Yeah, but the seasonality can produce yen strength for let's say 16 weeks. Well, that ain't going to get you a better price. So the issue, guys, is do you have a kill switch built in? Like, what if you see something like this? What do you do? Because this could be 1, 2, 3, 4, 5. This could be out of position for 2 weeks, right? And in fact, if you look at this, let's do it this way. From this period, right, to this period where it really becomes bullish again, it's December, the end of December to February. So let's just call it a whole month. Okay. By the way, we said December 18th was the take profit day, and that's right in here. So you might be able to use this information. Okay. Pretty nice, right? What fundamentals support a strong yen? Yeah, it used to be a de facto pseudo, I should say. It used to be a pseudo reserve currency in Asia. Japan has a very mature, very liquid bond market. Okay. So anyways, we'll pay attention to that. Yes, I will do that, young wolf. My pleasure. Let's do some commodities. Bum. Oil back down into the central pivot for the month. Okay. Remember this? Remember this day when we're making this big stink? Okay. Back into a trade zone. So if you were a bull, you would expect this. And as soon as it stopped doing that, it became technically important. And now we're down here. Not bullish at all. So you have to decide what do you want to do for next month. Okay. And I'm not looking at this month's central. I'm looking at next month's pivots already. So if you were going to trap this as a range, I think at the very least you'd probably anticipate something like this. I think more interestingly is if we open up hot negative next week and then kind of want to pull it back up for next month. Freed says dollar pairs. Wayne, yeah, I'll get there. Let me finish with commodities. Okay, nat gas. Again, as a bear, you should take profit. Central pivot predicts S2, and we're on it. After that, they're risky pips. This ain't pips, but anyways, it's risky after that. Brent coming down as well, but of course it should. This failure here indicates the end of the bullish trend. Back out a little bit, and you'll see very similar to WTI. I'd be cautious on this. I'd be neutral. So, like, maybe we could represent it this way and say neutral, not bull, not bear. Okay? It's way underpriced for the scenario. But if you were going to continue to be a bear, the sell would be at 65 or 66.5. If you're a bull, the buy would be at 52. Or sorry, 62. Okay? Take a look at Biddy. So we said several days ago that it made a 382 Fibonacci retracement back here on St. Patrick's Day, so 2 days ago. And based on that, you'd be a buyer at 55, and the target is 70. And we've made it to 60. Not quite 60. We're on our way to 60. Richard says when oil prices fall, gas prices fall. Well, buying nat gas and gasoline are two different things, so I'm not sure what you're saying there. And historically, they had an inverse relationship. So if you're talking about nat gas versus oil, and that they do the same thing, that would not historically be the case. No, it'd be the opposite. Okay? They're substitutes. Okay, so anyways, 382 equals 70,000, and the 382 is here. It's actually 54,000 is the entry, and the target is 70. Cool, right? What do you think? Yeah. And then here's the other thing, Richard. Richard says when oil prices, gasoline prices fall too. My experience is, yes, that is mostly true. But what I've seen in my lifetime is, oil prices drop by, let's say, 50%, and gasoline prices drop by 35%. And you're like, why isn't it the same? Because you're getting jacked. All you know is, gasoline used to be $3 a gallon, now it's $2 a gallon, and you're happy. You don't care if it should be $1.65. You're like, hey, $2 is better than $3. Yeah. That's the game they play. Because most people don't know anything, right? Yesterday, everybody turned bearish on Bitcoin. Is that right? Why would you say that? I don't see any evidence of that. This right here is a beautiful pullback. This is beautiful. This is a 1, 2, 3 pattern. Let's do a different color. Let's do blue. Okay. This is a 1, 2, 3 pattern. This is a beautiful pattern. So I'm not sure where you say, well, the guys you watch on YouTube. Well, I don't know what to say about that. I'd say nothing has fundamentally changed. A long-term trade plan is in effect. A double bottom with a higher high is very obviously a buy on the dip. I mean, it's childish entry-level stuff. So I don't know who you watch on YouTube, but that's a pretty basic trade plan. Yeah. All right. Well, so what I said 3 or 4 days ago, unorthodox, is that this move here predicts up. And so this is just a buy into a, I have it double marked as a roll reversal. So it's definitely a buy. So anyways. Yeah, clearly it ain't everybody, right? Yeah, I wouldn't see it like, really? Why? Not really sure why. Let me try to figure out, like, are they playing it like it's a top? Yeah. I guess what, they're kicking it off 60? Yeah, okay. I mean, okay. I'm okay with that. They're kicking it off 60. They're playing it as a top. Okay. All right. All right. But I'd still buy the dip. Do I ever buy Bitcoin? Do I ever trade Bitcoin? Sure. And I do a lot of transactions in Bitcoin, so yeah. Over my lifetime, like transactions, maybe, I don't know, 250,000 maybe. So it's not a significant part of anything, but I love Bitcoin. Yeah. I love blockchain. Yeah. But not leveraged trading or anything. Like, I mean, like this account, you know, this kind of thing, like trading here, sure, it's not a big part of what I do, but I'm certainly not against it. And then the second part is, you know, as far as real world transactions, like actually moving money around and stuff. Yeah. Yeah. Am I in any trades? We'll take a look. I have 700 pips on open trades right now. So I'm in 1, 2, 3, 4, 5, 6 trades. But it's been really slow going and boring the last few days, so I'm just doing my thing. So what should we do now? I get dollar pairs, I guess was, oh no, I was asked to do gold. Let's do gold. Okay, still not there, still not ready. I don't want to be the first one in, but you know, a double bottom at 17 would be nice. Okay. Okay, so it's too early for me. Double bottom up, and then probably even then I want a 1, 2, 3. So like I just showed you, a 1, 2, 3 would look like this, and I would be along sort of in here. Markets are readjusting. What do you think after the Fed? Yeah, well, I told everybody it would do that before the Fed meeting. So I'm like, yeah. Okay. There's no surprise. Everything is just as I described. I mean, go back to Monday and Tuesday and Wednesday videos. We've talked about it in my swing trading groups and stuff. Like, everything is exactly the way it's supposed to be. And there's no interesting sort of surprise. We'll take a look at peso here. I'm short at the roll reversal. Pretty standard trade. Okay. So we'll see what happens from here. And the other ones I sort of missed. And this is just like the tertiary entry. But here's the Fed meeting. Here's the pullback. I sold it with very little volatility, very little effort, very little stress. Simple roll reversal off of a midpoint cycle level. Like, and so now I'm hoping to see a lower low. And if I do, I make some money. Okay. You see it, guys? So the news came out. The volume and volatility was crazy. Right? Like 24 hours later, I sold it with just, and now I'm looking for this. Cool. This is Mexican peso. It pays approximately 50 cents a day. Okay. Right? Which is more than $180 a year. Okay. In interest payments. More than that. Not much more, but more. Now, the interesting thing is I only have $100 invested of my cash. So I get 100% of my money back plus another 80% on top of that. So it's like I hold a bond that's paying me 180% a year. Plus I'm earning asset appreciation. So since I'm loaning Mexico money and the Mexican peso increases in value, I make money. To say it differently, they're going to, you know, I'm going to have more dollars in the future. Plus they're going to pay me income. Daniel, would it be sustainable to grow your personal account at 6% a month on average? Why not? See, in the beginning, it's fairly easy if you don't have any money. The issue is the more money you get, the more difficult it becomes because losing becomes more, let's say, important than winning. So we've seen it in lots of human studies. When you don't have much money, you'll take on super amazing risks because it's not a lot of money. And you're already poor, so like to go back to poverty is, you're just trying to get out of poverty and you'll risk everything, which is nothing. To someone with tons of money, they already have tons of money. They're already rich, so their worst nightmare is becoming poor. Right? So anyways. Yeah, but that's what I'm saying though, Daniel. Some point between your $1,000 and your $1 billion, your attitude will change. Okay? All right. Like, for example, okay, real estate. Real estate's a great one. Right, I'm looking at a deal where I can put 10% down and have the bank put in 90%. Okay. Cool. Now, the mortgage, right, the bank collects 3.2% on this deal, annual. Okay. The mortgage, let's say it, let's change the numbers a little bit. The mortgage, the payment. So let's do it this. My expenses are 1,000 cost of capital, let's say, and $500 others like insurance, HOA, other, right? So, right, so it'll rent for, let's make this number work out. It'll rent for $2,200 a month. And then I'm going to take my other leftovers, so I'll have $700 left over, right? And I'll pay off the bank even faster, so I'll take a 15-year mortgage. So that'll pop it up. So I'll make nothing. So at the end of every month, I'll make nothing. But the mortgage will be paid, the HOA, the insurance, and other expenses like electricity and all that kind of stuff will get paid. I could put $700 in my pocket, but then I'm going to give back and I'm going to buy out my partner. So instead of having a 30-year mortgage, I'm going to have a 15-year mortgage. Bear in mind, I have almost no cash in the deal. Okay, Daniel? I have almost no cash in the deal. At 15 years later, okay, I own 100% of the property, Daniel. And I didn't pay anything for it. I got it for free. Yeah, I had to put 10% down, but even that got bought out. So 15 years later, I got the money I put down back. I bought out the partner that owned 90% of the deal. He got bought out. He's happy. The bank's happy. For 15 years, they cleared 3.25%. Okay. Hey, the 10 years only at 1.5. I mean, they make two. Because I only have 10% down, they're clearing, it's a carry trade guaranteed 2% a year, backed by, a physical asset, right? Mortgage-backed security. So they're super happy on this deal, but 15 years later, I have 100% of the property. Okay? Now, let's think of this. Has the property gone up in value? Well, I collected rent every month for 15 years. Someone's going to think that's valuable. Plus real estate in general, macroeconomics in general, population growth in general. Okay, it's lakefront property. It's always going to be attractive to people. Okay? Okay, you got that? So let's say it goes up. Well, at what percent do you think it'll go up every year? Let's just say it could double? Nah, but whatever, math. But here's the thing. So now I sell it. Okay, now I sell it. The value of the property I get market value for. I pay some taxes, and everything else goes into my pocket as cash. And if you crunch out the numbers, the modest numbers is I'll make 10x. For every dollar I put in, okay, for every dollar I put in, I'll have $10 in 15 years. And I paid, right? And I did nothing. So, Daniel, at some point, you know, you're busting your butt, you're busting your hump to make 6% a month, and you're like, I'm going to grow, you know, this $1,000 into $1 billion. Okay, you could. Mathematically, you could. Most likely, you're going to change your behavior along the way. You might be happy with, you know, like, for example, most people, if they had $5 million in cash and then invested it properly, don't have to work ever again. In fact, they don't even need to spend the $5 million. They can live on the interest and the income and all that kind of stuff, kind of like buying this property. In 15 years, I can just keep $2,200 a month. And the value of the property is still going up. You see that? What percentage of America do you think can live on whatever they receive from their government, whatever they receive from their pension, let's say, from working a whole, you know, lifetime, and $2,200 on top of that every month? I think a lot of Americans can probably live on that. And the nice thing is, they don't have to do anything. They'll get their money from the government. They won't have to do anything. They'll get money from their pension. They won't have to do anything. They'll collect the rent on this piece of property. And it's all about doing nothing, right? Getting paid to do nothing. And what will happen is you'll get to that, right? You'll get to that area where suddenly that sounds really nice, because if I waited another 10 years, that property will go up in value. I can collect rent every month. The property will go up in value another 50%, and I can sell it then, and I'll have all that cash come to me. So it's like 50% more plus $2,200 a month every month, right? Because I won't have a mortgage. You see that? I'll still have my expenses of insurance, my expenses of HOA. So let's say that, what does that come down to? I'll make $1,700 a month, doing nothing, month after month after month. Okay. At the very least, if you're retired, you say, well, I'm going to live a modest life, but once a year I'm going to go on a trip somewhere around the world, and I'm going to stay first class, right? And that you could budget, $30,000 for this. Every year you go on a $30,000 trip somewhere. So you get like the penthouse suite on a cruise ship or something like that, and you live like a baller. And who pays for it? Your renters. And then when you're sick of doing this, you're too old to travel, you just sell the house or the property, and you put, I don't know, whatever, you put the money in your pocket, whatever it is, $1 million cash. You get sick, you get cancer, sell the property. Your renters pay for your cancer. Okay? So what'll happen, Daniel, is you'll start accumulating wealth. Okay? You will start to accumulate wealth, and you'll focus on wealth accumulation, not the income side, right? So what will happen, though, Daniel, is if you're doing that, you're not investing other places, nor are you paying yourself. Okay? Do you understand? Like, to do that, Daniel, you're never allowed to pay for yourself. So let's say you don't have a lot of money now. That means in 15, what did you say, 20 years? So let's say 15 years from now, you'll have $500 million in the bank, but you're driving Uber at night so that you can pay rent and buy yourself food. And then somebody says, hey man, why do you drive Uber at night? You seem tired all the time. You're like, well, I have $500 million in cash and I'm trying to get to $1 billion, but I can't spend it. So, yeah, so I drive Uber and I live in a tiny little apartment and, you know, I don't have money. I don't have enough money for food. Okay. So anyways, I hope it's not that, Brad, because then what? I'm being baked by my computers, huh? So, but you see, Daniel, would you be willing, Daniel, to live radically modestly? What do they call that? There are people that do it on YouTube, right? What do you call it? Where you have like no furniture, you know, none of this, none of that. You just live in an empty apartment, and um, okay. But my point is, at some point, you'll say, you know what, 500 million is a pretty good start. I think I'll buy a house. No, it's more than minimalist. Okay. Okay. So you'll want to diversify. Your attitudes will change. Your attitude towards risk. Oh yeah, so the young wolf and Morena, they're like, hey, well, there's still risk associated with investing in real estate. Oh, of course, of course. But what I'm trying to say is, you will want to diversify. You will want to say, yes, I'm trying to double my money every year, but I can guarantee or nearly guarantee myself 1,000% return. Over 15 years if you look at something else. Because remember, 10x is not right. It's big. So how do you say, like, you put 10,000 in and you get 1,000,000 back? Would you do the deal? So the next question is, well, how long and how much risk? So, right, so, you know, and you have to, so here's the other thing. You have to have the credit and the means to be able to get 10% down and all that kind of stuff. So anyways, what I'm trying to say is you will change your behavior as you go from no money to money. And the more money you get, the more you'll change, and the more you'll think differently from when you had nothing. The more you get, the less you'll behave like you have nothing, because you have more to lose versus nothing to lose. Okay? So like, for example, Daniel, you're on your way to $1 billion. How will you behave once you have $1 million? Okay, many people would just be, that'd be it. They'd hit their number like $1 million. I'm a millionaire. I went from nothing. I used to have $1,000 in my account. Now I have $1 million. I'm a baller. Boom. And the dreams of $1 billion goes away. Most people would do stuff like that. So once again, your behavior will change. Okay. What if you live from your fund clients? Of course, but that's why you do that. So you have to realize, when you have $1 million in cash, you will still be poor. And you will work for other people. You will be the worker. Because the people that gave you the $1 million, it's chump change for them. And for you, you're like, oh, it's my entire life savings. So at least you can tell your client, look, you put in a million, I'll put in my million. My million is my entire net worth. So I'm going to treat it very serious. I'm going to treat our endeavor that we're doing together, I'm going to treat it very seriously because it's every penny I got. Okay? And then you live off the 20% and you compound your million to 2 million, to 4 million, to 8 million, to 16 million, to 32 million. But how are you going to behave now that you have 32 million and your clients are paying you 200,000 a year? You're like, I have $32 million, right? And you're making someone else filthy, stinking rich, but they're only paying you 200,000. You're like, well, what the hell? 32 million, right? So you'll change. You'll invest. You're like, where can I park this money so I can get some good tax treatment? I can. So like, here's the other thing. Down here. Here's the great thing about real estate. 5 years after I make my deal, and because I'm aggressively paying off the mortgage, I have about 30% of equity now. I paid off 30% because the amount of money you're paying to interest in the beginning is super high, especially if you're leveraged, right? You only have 10% in, so you're paying a lot of interest in the beginning. That's why you want to take your other money and plow all of that down. So 5 years later goes by, and now 70% of the mortgage is gone. I could actually get into a second real estate deal and borrow against that equity. Maybe if it's not 7 years, probably by year 8, because you'll be closer to 50%, right? So now you can say, well, you got 50% of that property, and you can kind of use that to leverage to buy a second property. In particular, that everybody knows, 7 years later, the mortgage you'll have 100% of that property, and they'll say, "Oh my God, this guy's going to have a great debt to equity ratio." And then you go in, you're like, "I need to borrow some more money from a bank," and they're like, "Dude, this guy's a great investor. He's got this property. He's paid it off. It's going to be paid off in less than 15 years, and dude, get this guy some more capital." Okay. Yeah, Marina's right. It's interesting. South Africa's always had this electric problem. But Young Wolf says, why not buy a proven business over real estate? Well, because you're focused on Forex. Okay. So, like, what percentage of the time, guys, do you have no available margin in your account? Like, never. So at any given time, you could take half your account and invest it into some other income producing property. Okay? So young wolf, let's say you're an old wolf and you're tired of working. If you had 5 or 6 different sources of income that are all passive, like you don't actually need to get out of bed, nobody ever calls you, kind of thing, but you own 5 things that produce income, you're going to be happy. You're going to sit on the beach, okay, until your skin turns into loose leather, and you're like, well, I make $20,000 a month. I don't do anything. That's more than enough for me to live on. You have money. You're still saving money. You're still, right? See, that you're going to get there. In the beginning, you want to be a young hustler. You want to, like, build, right? You want to build. You want to grow. You want to get big. Later on in life, you're like, I have enough food on my plate. There's enough. And then you're like, my whole life, I was hustling. And I made sacrifice. And I gave things up, and relationships were strained, and, it was hard. But now you have more than enough, and you're like, now I want to focus on me. I don't want to hustle anymore. My plate is full. Okay? So you change over the years, you change over time. but be a young hustler and get out there. Get right. Focus on the long term, knowing that you're going to change, and that if you want to be in a certain place at a certain time in your life, you got to do what you got to do now. You got to hunt. You got to make sacrifices. Okay? Steven says, buy a hotel. Yeah, totally. Okay. Yeah, but see, Young Wolf, real estate is a business. Okay? So I'm not saying don't do that. Owned. Here's what I'm saying, Young Wolf. Real estate's just another form of everything. Okay? You want to own assets. Ideally, income producing assets, because you can stave off starvation on the income, and then way down the line, way down in the future, you could sell it and you get this big windfall. That's cool. The other way the other kind of investment is you buy a stock and you hope it triples in value, and then you get rid of the stock and now you've tripled the money. It's nice to have sort of both, where you're earning income and asset appreciation. So here's the thing. The best thing you have is Forex. Okay? The best thing you have in Forex is Forex. But you don't need the amount of money that you have in your account at all times. Okay? So, at some point, you'll be big enough that you'll take that capital and diversify. Yeah, Stephen, I constantly look at hotels and stuff, especially through COVID. A friend of mine sells hotels all the time, so I can hook you up with one of my Harvard buddies. They buy and sell hotels all the time. And he'll go out, negotiate the deal, even just for raw land, and they'll build hotels. But right now, like I remember right sort of in the beginning of COVID, he was buying hotels at like 30 cents on the dollar, and people were thanking him. So. Oh, yeah. So, Richard, it's interesting. I've met someone that just specializes in car washes. He doesn't run them. He builds them. So he'll build them. He'll acquire the property, build it, and then sell it to somebody, right? Produces 15 grand a month. Yeah. I'm paying everyone. Yeah. Yeah, but see, that's hard work, Richard, right? That's hard work. So what I'm trying to get you towards, Richard, is saying you're going to make good money trading Forex. You'll make more than enough, and you'll save for retirement, all that kind of stuff, okay? And then you'll have excess capital left over, and you'll stare at this $1 million account of yours, or $500,000 or 100,000, whatever the number is, and you realize that you don't actually need that much cash to do well in Forex. Okay, what you'll do is you'll have the net worth. See, the issue is someone puts in $5,000 into a Forex account, and that's pretty much all they have, and they're trying to get rich quick. Well, what if you had $100,000, and it allows you to trade a certain number of trades or a certain lot size, but ultimately you always have the money in there, right? So like I have 100% available margin, right? Right? You see this? Like, I can make some more trades. I might have to get out of this. No, this is a good one. Right? Like, these are profitable trades, right? I have my account plus 650 pips. So I still have the same amount of money in my account plus 650 pips. So if you had 37 trades open in $1 million account, well, you still basically have $1 million in your account that you're not fully accessing, right? Could you do the same type of trades with 500,000 and take 500,000 out and then invest that into real estate and have that leverage. So you're 20% down, you borrow from a bank 80%. So, right? So you got 500 in, but now you own, like, let's say a $4 million property. So now you own a $4 million property and you have $500,000 in your trading account. Your trading account is doing fine, growing fine, all that kind of stuff. But now you got this other property and it's got some income, and you know in 20 years it's going to be worth significantly more. And here's the cool thing, like when you own your own house, you're making mortgage payments, but much of those mortgage payments you get back through amortization. Like you're paying down the mortgage, but when you sell the house, you get that back, right? So, but minus the interest. But if you put someone else into the property and they're paying the mortgage and it amortizes, then at the end of the gig, you get that big windfall, plus the income it produces, right? And so maybe you subsidize yourself with that income, or reinvest it because you don't need the income and you're paying down the asset. So and you amortize that even further, so your payday comes sooner. Or you significantly increase your income because now you own 100% of the property, so everything goes to you. You don't have any partners like a bank. So anyway, so you're thinking ahead. So in 10 or 15 years from now, you know, you're paying yourself pretty decent money, but your net worth has gone up exponentially. Côte d'Azur, wow. Yeah, well, okay, that's nice. Let me know if you buy it. Maybe I'll swing on by. So anyways, you'll want to do it, guys. What you'll want to do is move. What you don't want to do is buy a yacht. Buy a boat. No, forget it. Waste of time, waste of money. What you should do is buy property. Buy a business. These are like whatever it is, income producing assets, and you want to diversify. So again, when you're too old to work, you know, you have 7 different income streams plus assets that are all appreciating. Okay? And here's the cool thing. Along the way, you're like, well, I really want a boat. Well, your renters are paying you rent and you have excess cash coming through. You have more cash coming through than your expenses. So here's the thing. You rent the boat. Yeah, it costs you $3,000 for the weekend, but it's a brand new boat. It's perfectly clean. It's perfectly maintained. It's gassed up. You don't have to store it anywhere. You don't have to insure it. And the cool thing is, yeah, it costs you $3,000 for the weekend, but your renters paid for it. So you're like, and you have a kick-ass weekend, and you're happy that you're a Forex trader that also has income-producing assets. And now, you're right. And that's when you move from being rich to being wealthy. Okay? Well, here, you're not going to get 10 crew members for $3,000, right? Hope says, yeah, but you can rent them out. Okay, well, then it's an income-producing asset, right? I don't think you can get a mortgage on a yacht. So right off the bat, you're buying an asset without any leverage, which will lower your returns. That's why real estate's great, because you go into the deal a minority holder, but you can control everything. Okay, imagine you're a high-tech startup, and you got this great idea, you want to change the world, and a venture capitalist comes up to you and says, we will give you, $8 million, and we don't want any control of the company. We don't want a board seat. All the terms are favorable. How does that sound? You hug them and kiss them. I love you, man. I love you. They're giving you basically some money, but they're like, hey, on the upside, give us some cash, right? Real estate is amazing because the banks give you such good terms. They're like, well, we want to make sure you're going to pay us back. Well, yeah, of course. I get it. You're lending me money. I promise to pay you back. Okay, well, we're expecting a 3% return every year. And you're like, dumbass, of what? You want me? Think about it, guys. Okay, how about you and your best friend, or you and your uncle, right? You want to open a restaurant together. You know everything about running, about sort of cooking. You're the chef, and you're like, you've always wanted to own your own restaurant, but you don't really have much money. So you call up your rich uncle. The rich uncle comes in, and the rich uncle's a great businessman. And he says, okay, well, I'll tell you what. I'll put up 80% of the capital, but I'm going to be the businessman. You put up 20% of the capital. You be the chef, and we'll split everything 50-50. That's how that goes down, right? What if your uncle said, okay, I'm going to put up 80% of the money and I'll be the businessman. You put up 20% of the capital and you be the chef and you can keep 97% of the profits. You're like, what? I get to cook. I put in hardly any money and I get to keep 97% of the profits? You're like, oh my God. Oh my God. Oh my God. All right. So you're like, sign me up, bro. So that's the cool thing about real estate, right? And the real estate guys, they don't really care because it's not even their money. Do you understand that? Where do they get the money? Depositors. It's not even their money. So it's a good deal for them. They don't do anything. Yeah, they pony up money, but at the end of the year, they're just going to have free cash flow. I mean, owning a bank's great. Hey, deposit with us. I'll give you 0.25%. And then they loan it out to somebody for 3. I mean, come on. What a great business that is. They lend out other people's money and collect, they collect 90% of the profit. You see? They only make 3%, but they collect 90% of the 3%. Oh, well, yeah. I feel like I've gone too far that direction already. I'm not going to go through my methodology of looking at hotels, beachfront property in Venezuela. But, yes, I was doing that just the other day. Okay. Cool. Well, Stephen, good luck with the hotel in the south of France. It sounds great. Setting up a corporation, Monaco. Hey, when you get it all set up, give me a ring. Maybe I'll hang out with you for a while. That sounds great. I love me there. Okay. Yen pairs. I thought we did yen pairs already. So let's get back to what we were doing. Sorry. Yeah, so I'm way up there. So this is concerning for me, obviously. So I got to pay attention here. Let's say, what's the real trend? Okay, so yeah, I'm not happy with this move, so we'll have to pay attention. But right. Rand, Euro Rand, I'm staying away from. Do some dollar pivots here. It's extremely cheap, yeah. Where are you? What's next to Venezuela? What, Suriname, Guyana? What else is up there? Most likely you speak Dutch. Okay. So pound dollar is actually in one of my buy zones. So I have some work to do later. Oh, Colombia. Yeah, Colombia is great too, huh? There's probably some pretty good deals in Colombia for investing. My wife and I had a great conversation about Colombia the other day. She's like, for some reason, hippos came up, and she's like, well, what about the South American hippos? And I'm like, honey, sweetie pie, honey bun. There's no hippos there in South America. She's like, yeah, they are. There's a big concern about them right now in Colombia. I'm like, honey, pretty sure hippos are African. They're African. There's no, and I'm giving her like the silly American, like, oh, silly American. South America and Africa are different places, right? And it turns out, yeah, Pablo Escobar's hippos escaped and have been reproducing for 30 years, and they're up and down some of the rivers. And sure enough, there's Colombian hippos now, and Colombians are trying to protect them because tourists are coming to see these wild hippos now. They're wild. I'm like, yeah, okay, they're wild hippos, and we're probably 10 generations into the process, but they're African hippos. They're not South American hippos. They're African hippos in South America. But anyways, yeah, so now there's a big push to protect the Colombian hippos. And I'm like, you know what? I don't think anybody in Colombia has even heard of these hippos. I think they... So I don't know. Yeah, Mahir is going on about the yachts and stuff. Yeah, but it's a big, giant money loser. You'd never do that unless you got money to burn. So anyways, let's move on. Let's move on. Let's move on. Come on. Come on. So I got this lined up of like, I might be interested in buying some of this pound. Yes. Yeah. Yeah. Hippos are the most dangerous animals. Amazing, huh? Okay. So, interesting. Might be time for blood in the streets. 38 maybe? Cool. So, stay away from pound. I might have to bail out on this kiwi. It pisses me off. I might bail and re-enter. I don't. So like technically, I'm still in an okay zone, right? But let me tell you how I feel about losing trades. What I don't like is when it's not working the way my plan was designed. So you could still argue like, Wayne, this is still a buying price, and this is still a buying price, and this is still kind of going up higher than that, and this is still this, and this is still that. That is all true. But my plan was this. And that ain't happening, and that bothers me. But I've waited too late. I almost bailed on this thing probably 5 times already. So now, because of my hesitancy, I have to pay the penalty. I have to stay in, which sucks because I could have just gotten out, had a smaller loss, and waited for better price action. And so I'm paying the penalty for the hesitancy, and I'm not happy about it, and I'm just expressing it so you understand me not happy. Okay. So in that case, the question is, right, do I stick to the plan? Well, okay. It's like one of these things. Yeah, all I can say is I wish it was going a different direction. And that's all I can tell you. So we'll come back to that. Yeah, well, remember quadruple witching today. Lockdown in Paris. Yeah. The foam seems to have made stronger dollar. No, no, no. I think what's happening. I've touched on it in the past, but not very well. But let me try to go through a thought process. There are some companies that need to borrow capital on a regular basis for cash flow reasons. And their cost of capital is going up. The Fed hasn't raised interest rates, but interest rates have gone up. Remember, the Fed only they influence all interest rates, but their open market operations have to do with the Fed funds futures rate, right? The Fed funds rate, not the 10-year T-note. 10-year T-note's going to be related, but it's not the same. And that is being negotiated, and interest rates are going up. So like I said, interest rates in the United States have gone up by 300% in 1 year. They have. So that's the issue. And they're expected to continue to go up. So like we will get to 2.0 and 2.5 probably by the end of the year on the 10-year T-note. So the corporations that access capital, remember they need capital. Think of a company like General Electric that might sign a multi-billion-dollar 5-year deal to build a nuclear silo or a nuclear power plant, right? A nuclear power plant. It's going to take them 5 years, many billions of dollars. Well, they have to pay the employees. They have to keep the electricity on. They have to buy the raw material and bring it to the site, put it together. But in an overly simplified fashion, they won't get paid for 5 years. So in the meantime, they borrow money to do all this stuff, and then at the end of the year, they deliver a product and they get paid for it. Now, of course, in reality, it's staggered, but let's just use that example. They're going to build something. It will take 5 years, and at the end of 5 years, they'll get paid. So in the meantime, they borrow money to finance the project, okay? So think of it that way. And so they'll have to tap in. So they used to be able to borrow the money for 1%. Then interest rates went up, and then they could borrow the money for 2%. Now interest rates are going up again, and they'll probably have to pay 3% for what they used to pay 1% for. But if you only have a 5% profit margin, your cost of capital has gone up, so now your profit margin is shrinking, but you're locked in to that price. You're going to get paid at the end of 5 years at a certain number of dollars. So your profit margin is shrinking. And this general idea is very true for many stocks in the S&P 500, and analysts and investors are adjusting because they're like, oh my God, some companies have done really well because money has been free. Okay, now that money is not free and expected to be more expensive, when you do your discounted cash flow projections, there are less profits in the future. And those expensive companies are going to be sold off. And then people will say, well, what companies will do well with higher interest rates? And so they'll get out of the ones that will suffer with higher interest rates, and they'll invest in companies that will do pretty well in high levels of interest rate, right? So they'll sell a company for $200 a share that's trading at a multiple of 48, but now money is going to be more expensive, and they're like, people are like, wow, maybe that's overvalued. So you're like, overvalued's great because I own it. So you sell it because it's overvalued, and the change in the cash flow projection, right, and profit margin predict. And then you say, well, what will do better? Then you look at like a bank. So right now, you can buy Deutsche Bank and Credit Suisse for like $13. And maybe in 5 years, when interest rates catch up in Europe or whatever, and they're in the same way, think of it now. A bank borrows for cheap, and then they lend it out to like a mortgage or a small business that will pay the spread between the cheap rate. And we know the Fed funds rate is not going to go up for 3 years. So the depositors are going to get hardly anything, almost nothing. practically zero for their deposits, but the bank is going to lend it to a mortgage because now mortgages are tied to the 10-year and T-note and the 30-year bond. And those are going up like crazy. So like in a year, you might have to pay 4% for a mortgage. Well, banks are getting the money for free. Right now, they're lending it out for 2.5%. Then they'll lend it out for 3%, then 3.5%, and then 4%. But they're getting the money for free. So banks' profits will double. So all of a sudden, you're like, well, maybe I should start investing in banks. So what you do is you get out of your like high-tech startups that are leveraged to the hilt, and then you go over here and you cash out of some of them, maybe not all of them, but you take some of the froth off, you take the icing off the cake, and you give the icing to a bank. Because maybe relative to that is cheap, but you're also projecting out in the future that those companies will now outperform, right? So it's like value versus growth and all these things that, you know, stock traders talk about. And you'll get a rotation. So the stock market will come down for the next 3 weeks and then will rally for the next 12. Okay? And it's a rotation. By the way, this happens at the end of the month. Have you guys put that together? At the end of the quarter, you're going to rotate out of one thing and start buying the next thing. So you can, at your quarterly report, you're like, we cashed out at the top of the S&P 500 right before that big plunge in late March. Okay? But remember, we've been talking about this, guys, for weeks and weeks and weeks and weeks. I have to reiterate this. There's all kinds of news going on, and oh, look at these interest rates, and what did the Fed say, and what did the Fed not say, and what? Look at Europe, and oh no, they're shutting down France. We knew 27 weeks ago the markets would be like this. So I want you to think 27 weeks in advance from now, kind of thing. So what's happening is there's a rotation because there's a change in the maturity of the market. There is a change in interest rates. There are. Look at the 10-year T-note. Look at the 30-year. We have a steepening yield curve. What do? Well, get out of these expensive stocks that have been relying on free money, and then look at companies that are going to benefit from a higher interest rate environment. Oh, well, that makes sense. I know, right? Okay. So if you come to this market now thinking like an investor first and then behaving like a trader second, I think you will do well. The most beautiful thing about this is your sort of your emancipation, your liberation. Your liberation from listening to me, your liberation from listening to people on TV, the liberation from going to webinars to see what other people think. You won't want to even know, because the more you know, the more you'll believe you're right, and the less you'll believe they even know what they're talking about. I want you to eventually become completely independent, where people show up and listen to you, and that's going to be your clients. Okay? Your clients are like, help me. Help me, Maida. Help me. So anyways, clients always need hand-holding. But they're clients. So here's what most people do. They go golfing with their clients. You want clients that are rich enough that they have a yacht, therefore you don't need to buy one. Luis, right now there's a couple of things going on. This rotation out of the stock market, or from out of stock and then back into stock. So we're in the point where we're at the end of the month, we're at the end of the quarter, more importantly. So I don't really care about the end of the month, I care about the end of the quarter. So the stock market should come down. We had a Fed meeting, which is being misinterpreted, but I expected the misinterpretation, which is fine. Okay, end of quarter, quadruple witching, all of this, there's money going to come out of the market for today and maybe for a little bit longer. And then that no one wants to sit on cash. Cash is trash. So all that investment will go back into something new. When that happens, the stock market will go back up and the US dollar will weaken. But once again, this is all part of the plan. We knew 27 weeks ago, 17 weeks ago, 22 hours ago. I mean, it's all part of the plan. Cool. Okay, so that's why the dollar is strong. It'd be a very short run thing. Okay. Has the Fed decided to taper their $120 billion a month? No. Why are they misinterpreting it? Most people are stupid. Right? What percentage of market participants are amazing? Like, look, there's, right? In any group, right? 50% of people are below average. Like, right off the bat. So, on the other side of the bell curve, 10 or 15 or 20% are amazing. And then of that, right? So now you got 30% that are better than below average. The vast majority of market participants either suck or are slightly better than sucking. Right? Like, and like, what about the other 20%? They're the billionaires. Right? Like, so it's just interesting. Those guys are doing the right thing. There's no doubt. Right? But 80% of market participants are not the best. They're not even close to the best. Right? Like, what do people say? 95% of retail traders are unprofitable. Well, then great. That's awesome. Because 5% are filthy, stinking rich. So how would you like a 5% chance of being filthy, stinking rich? Do you have it? And the cool thing is every person shows up. They're like, well, I'm different. I'm definitely in the 5%. You just have to act like it. That's the next step. Right? Right? So there's a saying that 80% of the game is just showing up. And I'm like, yeah, that's true. And then not sucking. So let's say 50% of the people in the market just never have a chance. Just never have a chance. It's mathematically impossible. They don't have game. You like basketball, great, but you're not an NBA player. There's a difference, right? And then what? At least 50% of the NBA players sit on the bench the whole game. What percentage are franchise players? Like 1%, right? Like, right? So, it's funny. Why do the market... how about this? Let me change the angle of attack here. I used to struggle with this. So going through my learning experience of teaching myself how to trade and invest and all that kind of stuff, I used to think that there was a secret. When I first started trading Forex, really, like when I first started trading Forex, it was a secret. Okay? And I thought I had everything, right? Yeah, I was a venture capitalist and all that kind of stuff. But I'm like, who makes all the money? you know, rich white men that smoke cigars. I'm like, that's me. Like, awesome. I can do this. Right? Great. So I realized after a while, like, I had to figure it out. There was no videos. There wasn't even YouTube yet. There wasn't Amazon.com yet. Like, it was a while ago, right? So I taught myself how to trade. And then as I got more and more mature as a trader, I started incorporating more news events. And then I started incorporating fundamentals and all that. And and I listened and listened and listened to any expert, really, any expert. And as I became, like, I'm telling you, like, after 10 or 12 years, I started to become very dissatisfied with the experts I heard on TV. Some of the investors I thought were talking their own book, which means they bought something a year ago and now they're interested in selling it. So they go on CNBC and they tell you how an amazing an investment it is. And they're like, yeah, we bought it and we're up 1,000%. And then all of a sudden, everyone in the stock market would want to buy it. And then, of course, they would sell it to them. And I'm like, oh my God, they totally just scammed everybody. Like, it went up 1,000%. You should buy it from us. Well, yeah, they want to get out. It's up 1,000%. You should have bought it a year ago. Why would you pay someone? I mean, but that's how the market works. So I realized, like, wow, there's a lot of people that go on TV and sell their book. You should buy everything I bought a year ago from me. I'm like, wait, that's kind of weird, right? And then the other half, I'm like, this guy is talking rubbish, and you realize there's a story behind his message. Oh, people invest with this guy because he tells this story all the time. The recession is coming. The recession is coming. The doomsday is coming. The doomsday is coming. It's all over. It's all over. It's all over. It's the doom is coming, and the doom and gloom. And they're like Dr. Doom and stuff. And you're like, oh, he's got a community, and people buy his books and go to his go to his conferences and his weekend seminars, and they invest into his fund, and they're just buying his story. And I'm like, oh, that's the shaman with the stick, and he's like, give me money and I'll make the sun go away. And of course, he only does this when his book says there's going to be a solar eclipse. And then you're like, oh my God, he's just a crazy old man with a stick and rattling shells and bones. Woo, invest in me. You're like, oh my God, forget that guy. And then there was a distinct time, maybe about 8 years ago, when I realized that the information I was reading in the newspapers was wrong. Because I was doing my work. So there was a time when I got something like 16 or 20 different subscriptions back in the beginning, and that tapered. And then I was getting Investment Business Daily and the Wall Street Journal and the Financial Times. And the Investor Business Daily tried really hard to sell me stuff. So I got rid of that. Like, hey, if you're like want to be a serious investor, you should buy our training courses. And they'd have full page ads for their own crap. I'm like, what do I have, a subscription to an ad? So I got rid of that. So now it's Wall Street Journal versus Financial Times. And they started printing the same press releases. So I'm reading the two. One is supposed to be English, right? Of course, now it's the American version. And the Wall Street Journal. And they would cover almost nothing. Nothing would be covered. They would say, well, let's talk about Jay Powell's speech last night. And you realize it's just a Reuters press release. And they're both printing Reuters press releases. I'm like, well, what about actual reporters, right? And then one day, right, so anyway, so I was attending these Fed meetings. And I watched this one. I'm watching the testimony from Ben Bernanke. And he said something. And I was there. I heard him say it. I heard the question, and I got his answer, and it was clear as day. He hit the world across the face with a white glove, slap. Let me say something to you. He said, if you interpret what I just said as this, then you are wrong. Okay? Like literally he said it like this. So the next day I'm reading the newspaper and it said, this is what Ben Bernanke said. And they cut out, then you're the wrong part. They cut that out. So it's like saying, Ben Bernanke, let's dumb it down. Let's say Ben Bernanke says, if you think we are going to raise interest rates, you are wrong. And the next day it said in the newspaper, Ben Bernanke talked about raising interest rates. But what he said is we're not going to raise interest rates. But what was reported is Ben Bernanke talked about raising interest rates. And I'm like, oh, snap. I canceled the newspaper that day. And I've never read anyone else's analysis or thoughts ever again. I don't read blogs. I don't read opinion pieces. The only newspaper I get now is Barron's, but the only thing I read in Barron's is profiles about professional investment firms, how they invest, how they raise money, who their clients are. That's it. I don't read anyone's opinion and analysis. I don't care what they thought Jay Powell said on Wednesday. I don't care. I read the report. I'm the only one in the world I rely on. And I love it. Okay? Yes, Sky Killer, it's in there, yes. Sky Killer says, couldn't attend the War Room yesterday. Yes, but it's in the playlist, yes. Okay? Okay? So I learned that the hard way, guys. If you're starting out in life, or as a trader, you're starting out in your trading career, that's 20 years of experience where I started with zero. And I got to be a grumpy old man. But I rely on nobody else. I'm not interested in the way other people trade. I'm not interested in a trick. I'm not interested in a new strategy. I'm not interested in anything. I don't care what people think. I just read the report and I make a decision. And I honestly believe you're going to get there or blow up your trading account, whatever comes first. But if I can speed up the process of your success so that you're making your own trading decisions, right? You analyze the information yourself and make investment decisions. And then you open your charts and you make trading, you take action through technical analysis and place your trades based on, your fundamental analysis. You're golden, man. You're golden. You're going to do more in 5 years than I've done in 20. Because I had to fail a lot to find the wins, right? And now I've never needed a change, right? So again, go back to my first videos on YouTube back in 2004, 2005, 2006, and you'll be shocked. You're like, oh my God, this guy uses some moving averages. He uses some pivot points. And that's it. Looks at things on multiple time frames, does some top-down analysis, drops onto a 15-minute chart and pulls the trigger. He tiptoes around news, but tries to trade with the trend. You're like, holy crap. He hasn't changed since 2004. I haven't needed to, and nor do I want to. But what it also means is what I'm teaching you in these free webinars is not like a cool, fun, new way to get rich quick. Hey, I found a good glitch in the matrix where we can hack it. I got some trading hacks where you can make money quick on Forex. Look at me, I just made 22 pips. I'm like, that's not how I think. It's not how I act. It's not how I preach. Nor do I think it's healthy or wise for you to fall for all of that. So think of that. If I haven't had to change my behavior, me working and sharing my knowledge and ideas and strategies and processes and thoughts with the open public for 20 years, if I haven't had to change one iota, then maybe it doesn't suck. And if you do the math, you're like, wow, this actually adds up. You know, like when we do things like, when I showed you that chart, what was it, a yen chart, wasn't it? This one? And you're like, wow, look at that. That's really weird. Wayne has a 0 lag 21 EMA. Like, what kind of weird math is going into that? But it correlates 99% with the 8 SMA. I'm like, I know, that's why I use it. Thank you, Maida. That's very nice of you. Not for tobacco. Oh, my. Can I buy booze with it? Okay, think of it that way, guys. I've been using this 8 SMA set on open for 20 years. Now, I had to not randomly find my settings in my moving averages. Let's pick one. Template simple. Let's do simple. Okay, I'll even get rid of this. All right, because I want to talk about moving averages here. Okay. I found these moving averages by spending 10,000 hours testing, not just staring around playing with things. Hardcore work. You understand that? 10,000 hours of suffering. I tried almost every tool and thought about why it works, why it doesn't work. I had a very complex system of 3 overlapping RSIs with a MACD. Okay? All this stuff. And I tested, I analyzed, I tested, I reflected, I adjusted, I analyzed, reflected, tested, adjusted for years. Hardcore work. Okay? Hardcore work. By the way, rookie trader, that's a full-time job for 5 years. I probably did 10,000 hours in 3 years. Probably even less than that, 2.5 years is my guess. That's all I did, 20 hours a day. But I didn't just sit and trade, guys. You have to understand that. Sitting and trading just builds bad habits. If you suck at golf, going to the driving range every day for a year will just reinforce how much you suck at golf. Okay? So what I did instead was I tested and adjusted and reflected everything. And if you look at my sort of standard setup of a 15-minute chart with a 1-hour chart and a 4-hour chart, and you start overlapping these moving averages on these multiple time frames, you're like, wait, this moving average on this time frame is almost exactly the same as the other moving average on the other time frame. You're like, well, that's interesting. And then all of a sudden you're like, wait, they overlap even mathematically. You're like, wait, if you do this and divide that by 4 and you look at this, you get that other thing. You're like, wait, there's like a mathematical harmony to all this. I know, right? Okay. And so now, like, it's interesting that we can go here and say, why does Wayne use a 5 EMA close with an 8 SMA open? It's the only open moving average, and it's the only simple moving average. Why would he do something like that? Then, okay, so 20 years later, we go to say, well, we got these really advanced tools, and we can go like a 0 lag, and let's try to, we know this is lagging, and we want to enter somewhere near it, but not in the future because it would have happened. So, like, how do we move the moving average to where it's going to be in the future? And we say, well, we have a tool that will help us do that. Okay? And where's the 21 going to be in the future? And you're like, send your biatches. They're statistically almost exactly. They're like 99% correlation. I know, right? Oh my God, the 8 SMA is the 21 EMA in the future. Oh. Yeah, I know, right? Yeah. Excellent trade, made up. I'm not on the pound. I didn't buy the pound. So you're selling it? Hey, I ain't buying it. So that's good. You're making money selling it. I'm avoiding losses by not having bought it. Yeah. So anyways, you guys see, like, this is why I haven't had to change. This is why I don't listen to other people's opinion. This is like, it's not that I'm arrogant, because you probably might think I am. But what I'm trying to portray is confidence. And that it wasn't because I looked in the mirror and said, I'm good enough and I'm smart enough. But I did the work. Okay? I've done the work and I've settled on what I believe is perfection for me. I'm the great white shark. I am perfectly adapted to my environment and I'm afraid of no one. Right? But that's not arrogance. It's because I earned it. So, sort of like the opposite of arrogance would be insecurity, right? So going back to this story I told about the hanging out in the S&P 500 trading pit. By the way, happy Quadruple Friday, Quadruple Witching Friday. That day, I was very excited. I'm like, oh my God, I get to go on the trading floor at the Chicago Board of Trade. Like, what an amazing day. And it was already the end, but it was just such a privilege to have been able to go there and see it. Like, I will be able to tell the story when I'm an old man, and all the traders there would have been dead already, right? So there I was, a young investor trader, hanging out in the 10-year T-note pit, hanging out in the S&P 500 pit, and all that kind of stuff. But I can tell you, going into it, I felt like I was excited because I get to see real traders. Rari, Wayne at fxbootcamp.com. Okay. So remember, I was super excited because I got to see what real traders do. And in my mind, they were better than me. I wasn't real. Like, I could trade, but I'm a currency trader. I trade on, a GFT or MetaTrader, and I'm just retail. Maybe I'm a big retail guy, but I'm just retail. I'm not like a real institutional floor trader. And I was going to go see them to see what a real trader does. When I left later that day, and I remember it, I was so giddy, my feet were barely touching LaSalle Street as I was walking home, or walking back to the hotel. I knew I had to start my own fund immediately, but I also, I knew for a fact I was a real trader, and I could beat them. That my way was better. What a turning point. I saw what they do and how they traded and how they behaved. I looked them in the eyes to see what kind of people they were and all of that. And I'm like, I can beat these guys any day of the week. Like, you put me in, I could play. I can play the game and I'll probably win. And boy, how liberating was that. Okay, so I've been liberated from that insecurity. And I've been liberated from listening to other people's opinions. I've been liberated to like, is somebody doing something better than me? Should I be doing what they're doing? I don't think that way. I don't act that way. I'm not even really interested. It might not be the best attitude, but it is the attitude. So I'm happy to share, but I ain't going to change. I'm happy to share, but I ain't going to change. I'm happy to share, but I'm not going to change. Okay? So anyways, have a wonderful weekend. Peace on earth. May the pips be with you. May our profits be above average. I am raising my prices on fxbootcamp.com very soon, maybe this weekend. It's currently 76.4% off. It ain't gonna, and I held it for a year. It's been a year. I'm pulling the price, I'm pulling the plug on that deal. So you got, I don't know. And then join my live group if you like the message you get from me. You can work with me. It's pretty simple. Other than that, there's all kinds of resources you can get. All the links are in the description below. I'd like to thank Traders Way for being a good, ethical trader, trading firm, broker. Thank you for being a good and ethical broker. I appreciate that. I appreciate the effort that you guys put into this. I've known some of you guys for 15 years. Can you believe that? Has anybody here known me for more than 10 years? How many people here have known me for more than 10 years? Anybody? Jim, for sure. Jim would be more than 15 years. Anybody else? Only Jimmy? Armin? Danny? Yeah. Yeah. So that's cool. And right? Armin, Dan, Jim, has my trading strategy and messages been generally the same, if not exactly the same, over those 10 years? Yeah. Yeah. Yeah, tweaking. I mean, you might have heard more about MACD and stochastics, but I just do it in my mind now. It's just faster, so I don't put it up there. But that's the thing. I preach. JDR says it all right there. Consistent. That's my message to you. If you work with me every day on these live free webinars, you will learn how to be consistent. Okay? It's probably the most important thing your trading career could ever produce, is that you are consistent. It's more important than anything else. You can make a ton of money in 1 year. People are not interested. They're interested in consistency. It's the most important thing. How many days have I not done a webinar? I bet you 99% of the time, probably more than that, I've done a webinar, even if I'm traveling, even if I'm sick. The only times I take days off are when the markets are closed or my internet goes down. I've literally done webinars through earthquakes in California, right? Tsunamis in Hong Kong, right? Tornadoes in Georgia. Okay? It's amazing. But so that's the number one message. I will teach you how to think for yourself, how to make your own trading decisions, and be absolutely true and consistent to yourself. Peace on earth. May the pips be with you. May our profits be above average. I'll see you guys on Monday.